Welcome to The Explainer. Today, we're breaking down a huge policy U-turn from the US Federal Reserve. Seriously, this has sent shockwaves through the crypto world. What a lot of people saw as a solid wall between crypto and traditional banking, well, it might just be crumbling down. Okay, so let's get right into it. To really understand why this news is such a big deal, we have to rewind a bit. We need to look at the pretty rocky relationship between crypto and US regulators over the last few years. And trust me, it has been a real roller coaster. The analysis we're looking at here paints a picture of a really turbulent time for the crypto industry. It directly connects the market's wild swings to what's been happening in the political and regulatory world, specifically in Washington, D.C. You know, what's fascinating here is how this timeline maps out the highs and lows. According to this view, there was all this optimism when Gary Gensler came in, but that soured pretty fast and led into a major downturn. The real turning point, this analysis argues, wasn't the SEC having a change of heart. No, it was Grayscale winning that massive lawsuit, which basically cornered the SEC into approving the Bitcoin ETFs. And here, the source really draws a line in the sand between the two administrations. On one hand, you have the Biden era, which is described as being all about aggressive regulation, creating a hostile environment, and basically labeling almost every crypto as security. And on the other hand, you have the Trump administration. Now, there was some early skepticism there, sure, but the source describes their actions as way more cautious, eventually morphing into these really pro-crypto campaign promises. The main takeaway here is the argument that politics, not just market forces, has been steering the ship for crypto. So with that as the backdrop, this feeling of hostility and regulatory pressure, the Federal Reserve just went and did something that pretty much nobody saw coming. We're talking a major policy pivot that could honestly change the entire game. And look at this quote. This really captures how a lot of people in the crypto space felt about the old rules. It wasn't seen as just being restrictive. The feeling was that this was a deliberate plan to completely cut off the crypto industry from the entire traditional banking system. And this is the headline. The Fed has officially pulled back that very guidance that made it so tough for banks to even think about touching crypto. This move is basically reopening a door that so many people thought was being locked for good. So let's break down what this actually means in the real world. For any bank that was kind of crypto curious but terrified of getting in trouble with regulators, this is a massive green light. It tears down those big keep out signs and signals a huge shift in how regulators are looking at crypto. Okay, so the regulatory door creaks open. The big question is, did the money follow? How did the market actually react to this news? Well, the response was immediate and it was powerful. We're talking a net inflow of over $457 million into spot Bitcoin ETFs in a single day. This totally flipped the script from the outflows we'd been seeing, showing this huge surge of institutional confidence literally overnight. And if we zoom in, you can see the heavy hitters making their moves. Fidelity just went on a tear with a staggering $399 million inflow. BlackRock wasn't far behind, adding $111 million. But what's really interesting is that not everyone was buying. Cathie Wood's ARK Invest was actually a net seller. It just goes to show you different giants are playing the game in very different ways. And this is where it gets even more complex. While ARK was selling some of its Bitcoin ETF, it was at the same time buying up shares of crypto infrastructure companies like Coinbase and the miner Bitfarms. So maybe they're taking profits on Bitcoin itself to double down on the companies building the ecosystem. Meanwhile, that same mining company, Bitfarms, was on its own shopping spree, scooping up $140 million worth of Ethereum in just 24 hours. It's just a wild, interconnected web of different bets. And this wave of investor optimism wasn't just in crypto. In the wider market, we saw other huge moves. Silver shot up to a new record high. And get this, its market cap grew so much it actually leapfrogged Google, becoming the fourth largest asset in the world. That is a truly wild shift in the rankings. So what's the big takeaway here? This one policy change from the Fed, it might be way more than just a small update. We could be looking at the beginning of a whole new chapter for crypto in the United States. Moving from a stance that felt, almost hostile to one that's way more open. It leaves us with the million-dollar question, right? Is this just a temporary change, or are we witnessing the start of a brand new, more integrated era for digital assets in the world's biggest economy? The answer to that is going to shape this industry for years to come. If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.